Following one of the most brutal crashes in crypto history, we have to have a serious discussion about whether this bull market is finished. If you weren't aware, this week's been not ideal in the cryptocurrency space. In fact, as you can see from this headline, there was 19 billion in crypto liquidations over the past few days, many of them through altcoins, which went down 80, 90+%, just a crazy amount of downwards price action throughout the entire space. And as it states here, the largest liquidation event in history with 1.6 million traders liquidated, 9 times the previous record. So obviously it's been a pretty tough week for many people who have been impacted by this. And if we look at the Bitcoin price action again, we can see it's not been ideal. And looking at the comparison between previous cycles, specifically the 2017 and 2021 cycle, we can see if we zoom in that looking at the previous cycles, which topped at 1,059 days and then 1,067 days, given where we currently are about 1,056 days into this cycle, if we are to average out between those, then this cycle may only have a week left. So rightfully, many people are starting to question whether the bull market may be finished. We've already topped and we're about to see a bit of a bear cycle, but I don't necessarily think this is the case. And I know everyone will say, of course, you're always bullish, but genuinely, based purely on the data, I don't think the most likely outcome is that the top is in for Bitcoin. If you follow me on Twitter, I've been very public about this. I put my money where my mouth is, and I'm currently buying and accumulating because all of my signals and strategies are pointing towards that being the most optimal thing to do with my capital right now. If we look at the global M2 versus Bitcoin chart, we can see recently we have had a little bit of a stagnation and contraction in the global monetary supply, but the typical Bitcoin 4-year cycle was primarily previously driven by the halving event. Every 4 years when the inflation rate of Bitcoin decreased by 50%, but now we're at about 96% of circulating supply of all Bitcoin that will ever exist are already in circulation. So I think Bitcoin is much more primarily driven by the liquidity and traditional business cycle that impacts traditional markets like equities. And as we can see by looking at the federal funds target range, we've actually recently seen a decrease in this, and many more are being priced in and expected to come in throughout the remainder of 2025. And as we can see in the previous instances of these rate cuts, it preceded Bitcoin's most bullish periods of price action. And as these were increasing, it coincided with the Bitcoin really struggling, which makes sense if there's if people can gain access to very cheap debt and interest rates are decreasing, then it makes sense that people will be a little bit more risk on and speculative. But the unfortunate reality is we live in a world where one tweet, one little bit of insider trading potentially can just cause a mass liquidation event throughout the markets. What we can do is if we go to TradingView here, we can see what this chart is, which is essentially the altcoin dominance chart. It's the Bitcoin dominance inverted, but then also subtracting the stablecoin dominance. And what we can see in this recent day on the 10th of October, the altcoin dominance, decreased from top to bottom 17%, over 17%, and now has rebounded since then. But if we just zoom out, I think a vast majority of people that were mainly affected by this were unfortunately holding and overexposed to altcoins, which we just look at the altcoin dominance over the past 4 years, it had decreased by over 50% into the last couple of months, and recently again had rebounded, dipped again to about 50%, currently still below 40%. So even though we've had a bit of a bull market rally in a lot of these altcoins, compared to Bitcoin since 2021, they're still underperforming by 40%. And I think this is a main reason why many people are incredibly bearish and thinking that this could be the end, especially when looking at truly fundamentally strong altcoins like Altcoin, which are down at over 84% in just an hour on the 10th. But all joking aside, this is obviously a very difficult period of time for a lot of traders and investors, and it really outlines why you don't need to be too overexposed, and especially exposed to leverage positions on things that are so volatile, altcoins which already have these huge speculative moves. If we look at the underlying fundamentals of Bitcoin, it's not like we saw a huge crash caused by a huge amount of selling occurring on the network. The long-term holder supply has been decreasing a very standard and typical rate for this stage in a Bitcoin bull market. If we look at the open interest, however, it's a completely different story. We can see leverage was building rapidly as Bitcoin had been climbing over the past few weeks, reaching nearly $32 billion just across these exchanges alone. And we can see in this one liquidation cascade, this big squeeze to the downside, it dropped to beneath 22 billion, around 21 billion. So we're talking 10 billion just across these major BTC exchanges liquidated practically instantly, which of course is terrible to happen. As soon as we see price start squeezing to the downside, we see traders who are overexposed to the upside, leverage long on lots of positions, have to forcibly close their position, which requires more downwards, which results in more downwards selling pressure, which results in more liquidations, etc. So this was a huge event, and like we could see from the news article, the biggest liquidation event in crypto history. But what we can see is the Bitcoin funding rates have recently gone incredibly negative. These are coin-denominated Bitcoin funding rates have been in the most negative territory we've seen since October 2023, practically 2 years ago to the day when Bitcoin's price was around $28,000. And as I said, it's very difficult to be bullish when everything is down. But if we just take a step back and look through a purely data-driven perspective, what we can see is looking at things like the value days destroyed multiple, is this move was primarily driven by these over-leveraged traders. The amount of large long-term Bitcoin holders, which would result in an increased amount of coin days destroyed when they move their Bitcoin, didn't really spike too much. We're not seeing a huge amount of spot selling. Like we could see from the long-term holder supply as well, it's at a very constant rate of profit taking. If we look to the spent output profit ratio, this actually went into negative territory. And considering Bitcoin is still only around 10 to 15% beneath its all-time high, and people are already capitulating for a loss, indicates that this was, again, mainly just people who had potentially bought Bitcoin at higher prices towards our recent all-time high around $125,000. If we look at the supply adjusted coin days destroyed, again, we can see this has actually been rapidly decreasing recently, which kind of plays into the value days destroyed. We're not seeing a huge amount of long-term holders with huge amounts of Bitcoin capitulating and selling at these levels. And this was all primarily caused by this black swan event, a tweet potentially looking at some further tariff wars. But again, if we look at the probability of this actually coming into effect, looking at Polymarket, people aren't really pricing this in as a genuine possibility. We've seen a big rebound in Bitcoin and across a number of different markets as well, indicating that this was, again, just a very quick flash crash. If you look at the fear and greed index, recently we hit into extreme fear territory, which if we look at previous instances throughout this cycle, have all been golden opportunities to accumulate some discounted BTC. But again, just looking at some more data points, if we look at the active address sentiment indicator, what we can see in every instance where Bitcoin has dipped beneath this lower standard deviation band, this entire Bitcoin cycle, it's been a golden opportunity to accumulate Bitcoin at a massive discount, almost always immediately prior to a big move. And once again, we've dipped into this lower territory, indicating that price has diverged massively from the actual network utilization that we're seeing, the 28-day percentage change in active addresses. And a similar story for the NVT signal, the advanced NVT signal. Very similar story. If we actually line up since 2024, throughout this cycle, all of the instances in which we've dipped beneath this standard deviation band before crossing back above it, we can see all of them golden opportunities to accumulate discounted BTC. Again, if we drop onto a slightly lower time frame, what we can see looking at something like the Bitcoin Crosby ratio, Bitcoin has recently entered oversold territory that we incredibly rarely see on an intra-cycle basis. And each single one of these occurrences throughout this Bitcoin bull market so far has been a great confluence signal alongside the macroeconomic, alongside the derivative, alongside the on-chain data that really points toward Bitcoin being at a point where we may have a little bit of a mean reversion to the upside. But again, we do have to acknowledge, and it's the most bearish case that I can see at the minute, as we rebounded in price action, as the Bitcoin price came down from up at around $125,000 and decreased about 15% in this big liquidation cascade, it would have been nice to see a rebound greater than about 9%, nearly $10,000-ish. But now, again, we're starting to decline once again, which brings me a few concerns, but I think the number one factor we need to be paying attention to is how the equity markets continue to react. And what we can see, if I just go back to the daily time frame, initially this did result in a big gap to the upside, so it'll be really important over the coming days to see how traditional markets react. If we look at gold and silver and other hard asset commodities, we can see they did not flinch, they'd continued to march to the upside. We really do want Bitcoin to fulfill this digital gold narrative, this hedge inflation asset, and not just this beta play to US equity markets. But overall, as I said, it's never fun to see Bitcoin react like this. It's never fun to see huge amounts of downside price action. But if we just look to the short-term holder realized price, essentially we've just dipped to this level of bull market support. It feels terrible to have it happen in such a short period of time, but throughout this entire Bitcoin cycle, essentially, every time, again, we've regained this short-term holder realized price, this average accumulation price of new market participants, we can see it was a golden opportunity, again, to accumulate Bitcoin at a discounted price before we saw a rebound in the Bitcoin price action. And not to mention the fact that we're on the cusp, well, we're in Q4, Bitcoin's historically strongest period of price action. All of these things are telling me that the probable outcome of a Bitcoin bear market being true, coming into effect, and the Bitcoin price action having already topped somewhere around 25, 30%, I still think the base case is further upside. And the thing is, now that we've actually seen this big liquidation event, the max pain scenario would be Bitcoin having an exponential rally to new highs. And as painful as that is to say, if you've been someone grinding every day for the past 3 years during choppy, boring sideways, consolidation price action with just a few weeks of big explosive moves, and now after one liquidation event, everyone is wiped out, 70, 80% of traders are completely wiped out, now would be the ultimate time to have this max pain upside scenario for Bitcoin. But like I said, I'm preparing for all scenarios. Here, I am accumulating spot Bitcoin. I'm staying away from leverage. And I do think that the most probable outcome is new highs in the Bitcoin price. And as much as I've got hundreds of comments on YouTube and social media recently that this is wrong, of course, and of course the top is in, I'm just playing the data. I'm playing the odds. I'm playing the probabilities. And until we see some confirmed breakdown on BTC, on something like the 1-year volume weighted average price, essentially the 1-year moving average for Bitcoin, which as we zoom out, we can see has basically been the dictating level between Bitcoin bull markets and bear markets. We can see even in the last cycle, this is where we rebounded before moving higher. And it was only when we convincingly broke beneath this that it was actually when Bitcoin's bear market really begun. During this cycle, we've bounced off it multiple times already. And if we just zoom throughout the entire history of Bitcoin, this has essentially always been the case. So this is currently sat at around $96,000, $97,000, but trending towards 100K. So I think beneath 100K, we really need to start having conversations that the bear market may be here, the bull market may be over. And at that point, we may have to acknowledge that a lot of indicators and signals maybe didn't work this cycle. But again, to assume that is true, to assume that this time really is different and every single Bitcoin on-chain data point metric has broken, I don't think is the base case. The number one thing that's moving markets, not just Bitcoin, but any market, is supply and demand economics. We're not seeing a huge amount of selling in the market. We're seeing a huge amount of over-leveraged traders being wiped out and having these liquidation cascades. But treasury companies are still accumulating over 1 million Bitcoin. ETFs are still buying heavily, billions of dollars worth of Bitcoin in the past couple of weeks. I think this is just a really difficult period to be overexposed to altcoins, treasury companies, and leverage plays. And after this deleveraging event, this wiping out of open interest, every data point is pointing towards me saying that the upside is the more likely outcome over the coming weeks. So just to summarize, the past few days have been some of the worst in recent memory for crypto investors, with many alts practically crashing to zero in a matter of hours, resulting in the largest liquidation event in history. It's been really brutal. If you weren't online, if you just missed this, if you try and have a weekend off, it just shows how 24/7 Bitcoin is, how crazy and volatile things can get. And even as we've had this period of long, choppy sideways consolidation with low volatility, volatility is as cyclical as price action. This contraction leads to expansion, and this huge explosive move obviously isn't the direction we were hoping for, but it just outlines that you really need to be prepared for any circumstance. But what we can say is that Bitcoin has managed to come through relatively unscathed. Obviously now we're seeing a little bit more downwards price action, which isn't ideal. We'd have liked to see almost a V-shaped recovery after this huge downward liquidation cascade, to see Bitcoin bounce very rapidly, very quickly and violently to the upside, which would have really indicated that Bitcoin does have the strength to move higher. But what we can see is we are really only at prices we were a few weeks ago. We're back in this choppy consolidationary range, which kind of outlines the same story we've seen throughout Bitcoin this entire cycle of stepping up long period of choppy, boring sideways, really painful price action to endure before these big explosive moves. And the fact that this has wiped out a huge amount of retail traders really does indicate that the max pain scenario would probably be to the upside, and that these big unannounced black swan fundamental tweets from one person can truly have a huge impact on a market that involves millions and millions of not just retail but institutional investors that really can be caught off guard. But like I said, as long as we don't see a large and sustained drawdown in equities, then this deleveraging event, could be a great opportunity to accumulate some discounted BTC. And that's certainly the way all of my metrics are pointing towards, and it's certainly what I'm doing. Scaling into Bitcoin beneath the short-term hold realized price is usually a good call during a Bitcoin bull cycle. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are down below on the current Bitcoin price action. Do you think that the bull cycle peak is in and we are now in bear market territory? Or do you think we are overdue a rebound and a mean reversion to the upside now that we've had this big deleveraging liquidation event within the markets? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.